Thank you everyone for joining us today for our webinar, Making Year-End Payroll Easy for Your Trucking Company. Hopefully this will be a lot of helpful tricks and tips. So a few housekeeping points. Just a reminder, all of you are muted for this session, but please, if you have any questions or comments, we want to address those at the end of the webinar, so please type them into the chat section and we will visit those at the end of the presentation. A little bit about us. Superior Trucking Payroll Service is the first payroll service in the United States solely focused on trucking companies. Our core mission here in the office is to help trucking families, and we really mean that. We are a full service payroll provider and not a software rental. Each of our clients is assigned a dedicated account manager who handles your weekly payroll week to week. We offer fully customized reporting and pay stubs and so much more. Today, we are sponsored by Ascend TMS. They are the world's most popular TMS software, and they're very easy to use. We do have a partnership with Ascend TMS, so contact us to see what kind of deals we can offer. And then a little bit about Mike today. He has over 20 years of experience in the trucking industry. He was a CFO of a trucking company with 80 trucks and a thriving brokerage. This experience has given him the perspective that a payroll solution needs to make trucking payroll easier and less stressful. The solution that he has designed is to benefit everyone.
Well, thank you, Melissa. Okay, today's webinar is about how we can get through year end and kick off next year and have the least amount of problems possible, because there's only problems in this. There's no winning, really. Unfortunately, this isn't one of those how I can save you millions of dollars webinars. I wish I had that for you. But here's what we're going to talk about today. What are the things we got to get done by year end? What are the things we need to do to kick off 2024? And then we're going to talk about the changes that are coming in payroll for 2024, including law changes, like labor law changes and things like that too. We're going to go into some of those. There are many in many states. I'm not covering them all because I'm only assigning myself half an hour for this. We could probably do 3 hours easily and you'd all be sleeping if it's not your state. So, and then we're going to talk about how to handle certain problems with year end. And when I get to these are the best places to ask questions. You can ask questions about anything. I may not have an answer about a particular law change in a particular state off the top of my head, and I'd want it to be correct. But if you have a question, please ask that and I'll just get back to you later if I don't know it. But those problems with the year end, and when I get into those, you'll see what those are, and you might have other situations that you might not know how to handle. So those would be great for questions and answers. It'll make sense when we get there. Here's a disclaimer. All this information was current to the best of my knowledge a couple of days ago. Things change all the time. If you've been in anything payroll adjacent in your career for a length of time, you know what I mean. I'm surprised we got new tax rates already. There have been a lot of years where we didn't even have Circular E or Publication 15, if that's how you prefer it. By now, we'd get it the week after Christmas, typically when Congress is trying to pass some tax law or something. All these laws are subject to change. These are as I understood them at the time. Things change. They hopefully won't, but I can't promise that. And then talk to your payroll service people, talk to your accountant if you've got particular questions. You can always ask us and I'll answer it as well as I can, but I don't know all of your situation like the people who work with you do. If you don't work with us, if you work with us, well, yeah, you always call us. But if you don't work with us yet, then talk to your current people or talk to your accountant or somebody and see if they can help you. Again, feel free to ask me. Our mission is to help trucking families. It's not just to help people that we have already done work for. So it's cool, but you also want to check with them. Oh, one last thing. When we're talking about different laws, I'm not into the politics of it. I'm not going to be like this side good, that side bad. I'm just kind of telling you what is. And if I'm complaining about a law, it's probably just the administrative burden. So it doesn't, but it's not on one side or the other. Now that we've disclaimed all that, yeah. what do we want to do before year end? The biggest thing that you want to do at year end is make sure that your names, address, and social security numbers are correct. It is 80% of your problems come from this. One of the things that's changed over the years because of privacy laws is that it used to be, back when I started working, my social security number was on every paycheck I got. So if there had been a problem, I would have seen it 50 times before now. Nobody does that anymore for good reason with identity theft. It all makes sense, but you want to make sure that you've got social security numbers correct for your people, and they don't see them very often. So as much as you can confirm those, you want to do that. Names and addresses, and for your 1099s also, this is all the stuff, same stuff applies. It'd be EINs for some of your 1099s. Your termed employees are going to be the biggest source of your grief. They were the source of your grief when they worked with you. They're their source of the grief now, because they're the ones who quit in February and you've forgotten about them and you've healed from whatever trauma they gave you, and now they've moved 4 times, and so they didn't get their tax document, which is a problem that we're going to talk about later, what to deal with them. But as much as possible, reach out to your former employees and people that are going to receive 1099s and 1095s and all that kind of stuff, and verify the information as much as you can. Don't email them a social security number and say, is this right? That defeats the whole identity theft prevention. So don't do that, but they can confirm it with you. The social security numbers also, that's mostly for employees you paid for the first time in 2023. If you paid them last year, it's probably fine. Social security numbers don't change. Names do change, addresses change, social security numbers do not change. So you just want to check, but you want to check on that stuff. It's going to make your life a lot easier. The next thing you want to do is, if you're using a payroll service or someone else is generating your 1099s for you, make sure that they have all the payments that you made yourself. We have had clients here that we pay their owner operators for them, and so we generate 1099s for them. And then they go, oh yeah, we forgot we gave that guy $5,000. Well, yeah, we paid him to do this separate job or something. Just first they'll say it's off the books. I'm like, no, nothing's off the books. You told me about it. It's on the books. And then I'll be like, well, it needs to be in their 1099 then, if you paid them and it wasn't just an advance that you took back later. If you paid them for work, it's got to be in there. So make sure that you've looked through those. I know there are some payroll services who won't do 1099s because of that. And I think one of the big national companies for sure. They'll give you forms, but they won't file them for you because they don't want them to be incorrect. And I understand where they're coming from. We file them for people because we're going to talk to you about this stuff. And we're going to give you a report first and say, does this all look right? But it's up to you. You're signing off on it as the employer, not us. Verify coverage information for 1095s. If you are an applicable large employer, which is 50 employees or more, you have to still issue 1095s. There was all this talk a few years ago that 1095s were going to go away. They haven't. They are still very much a thing for 2023 and going to be a thing for 2024 at a minimum. So you still have to do those if you've got 50 employees. But what you want to do is you want to make sure that you've got the right coverage information for the people, so that you know what to put on the 1095 to make it correct. If you have incorrect 1095s, it becomes a whole headache at like 18 months from now. You'll get a love letter from the IRS and then you have to go fix it. You don't want that. It's a pain. And they threaten you with big fines. They generally don't collect them if you filed and just had to make a correction, but it's still a big pain and you want to avoid that. We do 1095s for our clients if they need them. If you're one of our clients or going to be, let us know. We'll help you with it. But that's, you want to make sure the information is correct. Again, who's being covered if you're doing a 1095B, you have to list the dependents on there and all that kind of stuff. And that's information we don't have. We might be able to determine who's eligible based on your rules, as long as you don't deviate from it. But we aren't going to know the dependent information if you use 1095Bs, which are, I don't know how many of you would do that. It's not the question we asked when you signed up. The last thing is, well, like the last thing I wrote on here, I'm going to come back to, but the other thing is, if you have an owner that needs to withhold tax, trucking's been hard, but some companies have made money. The ones that had contract rates still made some money. And so sometimes the owner has to bonus themselves to withhold tax. They're basically just bonusing for tax. Make sure you get that done this year. If you do your payroll in-house, obviously you do it. If you use us or somebody else, make sure that your payroll service provider knows what you want to do, so they correctly withhold and get it on the W-2 correctly, which is really the goal. Last thing is, are you in a FUTA credit reduction state? What a FUTA credit reduction state is you pay FUTA, federal unemployment, basically $42 a person. It's 0.6% of the first $7,000 in wages, but it's really more than that, but we get a credit back because we made our state payments on time. Well, that credit gets reduced if your state had to borrow money from this FUTA that you pay into, which is all it does. It just lends money to states. If your state didn't pay it back, you lose some of your credit reduction at 0.3% a year. So basically $21 per employee per year. So last year we had four states or territories that had it. This year we only have 3. California, New York, and the Virgin Islands all have credit reductions, which means that for California and New York employers, instead of paying $42 per employee that had at least 7,000 in wages, you're going to pay 84. Quite likely you're in payroll service, if you use a payroll service, or if you're doing accruals through an in-house method, they're not booking for this because we don't know until late in the year that this is going to be a thing. Illinois had it last year, so Illinois people, good on you. No problems this year. I was so happy to see that. We've got a number of Illinois clients, and I'm happy that I don't have to go explain what's going on to them because there's no winning. It's not like I get to keep the money or something. So Virgin Islands has had this since 2009, I think, is when the recession, Great Recession back in 2008. So they pay an extra 4.5%. I think it's about $315 per employee. If any of you are in the Virgin Islands and you're watching this and you want me to come and make a presentation about how to sell payroll to you, I would be happy to do it. Also, anybody in Hawaii who doesn't have credit reduction, I would also be happy to fly out to you. I don't even care if you sign up. There's actually like 11 side trivia. There's, I think, 11 trucking companies in Hawaii. I looked. Okay, so that's 2023. If you get those things right, you're ahead of the game. Again, the names and addresses were the big thing. 2024. What do we got to do to kick this thing off? These are the things that you can do really before 2024 even starts. Insurance deductions and 401k or retirement plan deferral changes. A lot of health insurance plans have a 1/1 renewal date. Not all of them. Everybody has something different, but a lot of people use calendar year. So if that's the case, you had to do open enrollment in December. And if there's going to be changes in the amounts of the deductions or any of that kind of stuff, we got to get that worked out. So you want to make sure that stuff's all caught up and taken care of. 401k plans too, every plan has different rules about when you can change your deferral percentages. Some of them have automated step up where they add 1% per year until you get to a 10% or something like that. Just make sure whatever your plan is that you're doing, and if there's deferrals that need to be changed, you get those set up for the first payroll of the year. First payroll of the year, by the way, everything's calendar year by the date you get paid. Constructive receipt is the name of the tax term for it, but you're going to have people that worked the week between Christmas and New Year and get paid. If it's, I got to look at my calendar now, it will be January 5 will be the payday for the 2023 work. They get paid in 2024. That is a 2024 W-2 problem and a 2024 problem for everything. It's not based on when you work, it's based on when you were paid. It's a lot easier for the IRS to figure that out. The next thing you want to do, review state unemployment wage limits. We've got a slide for that coming up. We'll show you. About half the states change the unemployment wage limits every year. I'm in Michigan. They didn't change it. They often don't, which is cool. Other states do. And then the third thing on here is just review new tax rates and exemptions. We're going to go through some of those, but not really a lot of them because there's so many. Every state's different. Most every state adjusts for inflation for those who have income tax. And most every state, Pennsylvania I think doesn't, but that's about it. So yeah, just be aware of them. That's really the key. Here is what we're talking about with state unemployment wage limits. These are only the states that changed. If your state is not on here, your state did not change. So if you are in Alaska, then your wage base went from 47,100 to 49,700. before anybody gets sticker shock at some of the crazy numbers like Hawaii being really high or Idaho, just random being really high, typically the states with the higher numbers have lower tax rates for unemployment, and the ones with lower have higher tax rates. It generally works out to $300 to $400 per employee per year for everybody, but it's not universal. So West Virginia just got in on, they were just on Monday announced that they're going to be 95.21 next year. I'm surprised that more states don't index this for inflation, but that's for them to worry about. I don't need them to do it. But yeah, that's, so again, you can see about half the states have new numbers. If your state's not on here, they probably have the same number. Your state will also tell you that anytime. We're not going to go through all these states, of course. Here's some other changes that are coming. Minimum wage changes. I know they don't affect a lot of you, but they're still important to know. We had that webinar that we did last month on the GOT Act, Guaranteeing Overtime for Trucking Act, that's in committee in the House and the Senate. This is where the minimum wage could come in if that becomes a law. I don't know that anything's moved on that, by the way. I'm just saying that could become a thing. And we've got the usual 401k, all those limits that change. And we've got some new labor law changes that are coming. You should be getting, if you're a client of ours, you should be getting updates, and you'll get a new poster every year that'll update all those things, but you want to be aware of those. And there's a bunch of other new leave and childcare laws and tax changes. And we're going to go through some of them. This is not an exhaustive list, but I highlighted the ones that seem the most newsworthy. These are the minimum wage changes. Michigan did make this list where I am. We're going up 23 cents to $10.33 an hour for minimum wage here in Michigan. Again, you can see some states are higher, some states are lower. But these are all, if your state's not on here, to my knowledge, the minimum wage did not change. Federal minimum wage hasn't changed since I think 2008. I think it is somewhere in that neighborhood. It's been a while. So, and again, that's not a political anything. I'm just saying they haven't changed it. So, but these are the ones that are moving up this year. New York's moving up $1.80, which is a lot for 1 year.
Wow.
But again, hopefully that doesn't affect you, but just making you aware of it. And I put them in the slide so that when we send you the slideshow later, you'll see it. That's really why they're here. I thought this was pretty interesting. This is a minimum wage map as of now, and the lighter color the state is, the lower the minimum wage is. So like Texas is a 725, which is the federal minimum wage state. I just thought it was pretty interesting just to see it as a map. You could say it's mostly political, but it's not completely political because Florida is a Republican state and it's higher minimum wage. Arkansas, Ohio are the same thing. And then Pennsylvania's got a Democratic leadership and they're a lower minimum wage. And New Hampshire always just does what they do. They like to be their own people. So they do whatever they want to do. So I thought it was interesting to see the lower and higher and how it varies. It's kind of a bummer if you're a minimum wage person right on the Mississippi River between Iowa and Illinois. You'd want to work in Illinois and get an extra couple bucks an hour. So, but yeah, again, not incredible there, but I thought that was worth seeing. Now we're going to talk about these are the highlights of what I would call the yearly changes. These change every year. So I've got the Social Security wage limit, which is 6.2% of your taxable wage. That with Medicare make up FICA. So it's going to go up from 160,200. That's the wage limit. So you'd pay 6.2% of that to 168,600 next year, which isn't as much of a change as I thought it would be. It's about 5%. 401ks, you can put an extra 500 bucks in. And if you turn 50, you get to catch up. That's what the catch up thing is there, is people 50 and older get to put an extra 7,500 bucks in their 401k if they've got a 401k plan. Simple IRAs go up $500. The simple catch up is not as big as the 401k for reasons that I don't understand, but it is what it is. The mileage rate, that mileage rate is for reimbursement. If you're driving, you're driving to Office Depot, going to pick up a case of paper or something, going to the bank. 65.5 cents in 2023. It's 67 in 2024. I put that on there for a couple of reasons. One of them is a lot of our clients will reimburse their employees for mileage at the IRS rate, so you know what it is and it's right there. Also, if there's anybody who watches this that's an owner operator or Schedule C and does their own taxes, you'll want that information. Again, your tax preparer would have all of this. I'm just trying to illustrate some of the highlights of the changes. The bottom one there, trucking per diem, did not change, which surprised me. It's been that for a while. It's been 69 in the
Yeah.
continental United States for a while. With all the inflation and all these things, our guys aren't getting any help. So it's still $69 a day. If you're not paying per diem, oh my goodness, you've got to go watch our webinar. We'll save you thousands
Please.
of dollars.
Yes.
You will save your employees thousands of dollars. You and the employees are the winners. The IRS and your work comp insurer are the losers. That's the very, very shortest version of that story, but there's better detail in that webinar. It's on our website. Go check it out. It's definitely worthwhile if you're not paying per diem or not sure you're doing it right. But it didn't change. Okay, here's some of the other changes that are coming up. Again, not exhaustive list, but I wanted to cover these ones because the reason I picked these two is other states may copy these in the future. So even if your state isn't on the list for a particular law, it doesn't mean it won't ever be on the list. Could be next year. So there's a new Form W-4 and a new I-9. The new I-9 started beginning of November. The new W-4 will start with 1/1/24 hires. If you have new hires, you got to use the new forms. They are downloadable and super searchable. If not, send me an email. I'll send you the link. Back when I started in the industry, we had to order them. People would order them and like from their office supply people. You can just download it and print it. It's free. So check that out. If you need the link, hit us up. We're happy to send it to you. All the income tax brackets moved up about 5.4% for the feds. Again, that's consistent with kind of what we saw on the previous slide for what the federal did, except for per diem. So what you're going to see is if somebody gets the exact same pay every week, their December 29 pay and their January 5 pay are going to be different because they're going to pay a little less tax, unless they got a raise or something, but then they wouldn't have the same pay. Alabama, I want to talk about this one. Alabama has a rule starting 1/1/24 that overtime pay for a non-exempt employee, that means an employee who is allowed to get overtime pay or has to be paid overtime for hours over 40, the overtime pay is not subject to Alabama income tax. Crazy to me.
Absolutely crazy.
Yes, we've got a way to do it. We're going to figure it out, just like every other payroll service is going to figure this out too. This isn't me tooting our own horn. We have to all figure it out, right? So we're all going to figure it out. But I don't understand why. But it'd make more sense at the federal level because you get taxed at higher brackets on your overtime because it's higher marginal pay. But Alabama's not that. It's progressive, but not that progressive of tax brackets. So I don't understand it. The thing that matters here is 18 other states are considering this. I was in a webinar last week with the Independent Payroll Providers Association, and we have a guy who spends his whole life doing this stuff. And he gives us a great presentation every year, and this is one of the things we were talking about. 18 other states. California has a number of new laws. I highlighted two of them. Overtime threshold is 2 times minimum wage. Minimum wage in California in 2024 is $16 an hour. So the overtime threshold, by the overtime threshold, we mean like to pay somebody salary and make them exempt from overtime, you have to pay them so much. And the federal limit's about $30,000. For California, it's going to be higher than that. It's going to be basically $32 an hour times 40 times 52. They keep moving theirs up. They set a new law now that we're not going to wait for the feds to do anything because the feds go back and forth. We're just going to do what we do. California. So pointing that out only again because it could come up with our with the God Act. Like that's where that could become an issue. California has a new law for this. I know this doesn't affect us, but I just want to give a little sympathy to somebody else here. Fast food minimum wage in California is $20 an hour. It's not officially law yet. It's expected to be signed by the governor anytime. I want to know how they're going to qualify what's fast food and what's not. Is Starbucks fast food? Is the diner across the street from me fast food? Is the burger place that's a little nicer than McDonald's, is that fast food? I don't even want to have to deal with that. Thankfully, I don't do any fast food places. We don't do any fast food payroll here. We just do trucking payroll, so I don't have to worry about it. But just know that trucking, we have all these crazy rules, and I'm sure we could spend, again, an hour everybody taking a turn of naming a crazy rule for trucking. We don't have this one, so that's good. Illinois, we have clients in Illinois. They paid leave. They have to provide 40 hours of paid leave for any reason for a full-time employee starting now. Michigan has a similar law right now. So that paid leave is now a requirement. Maryland is going to enact paid family leave October of next year. Minnesota has an interesting law. It's a pay history ban. When someone is applying for a job in Minnesota or being interviewed for a job in Minnesota, even if it's in the same company, you can't ask what they were getting paid before. It is absolutely not allowed. So the idea is that if somebody was underpaid at their current job, these other people think they can hire them and have to pay them less. And they're trying to get rid of that. It's a noble idea. I don't know how it's going to work. We'll find out. Minnesota is kind of like New Hampshire a little bit, where they just kind of do what they do. But yeah, I just thought it was interesting. But even for like an internal promotion, if you were, say you were a dispatcher at a Minnesota trucking company and now you're going to become operations manager, they can't really talk about your pay history if it was a big enough company where it would matter. They can't discuss your pay history, or they can't take that into consideration. So they can't ask you about it. New York, their salary threshold, California is twice minimum wage. New York's is going up to $1,300 a week flat to be considered salary. And again, I don't know the legality of how all that works. I'm just assuming it works. It's not my fight, but just want to point that out. Vermont's gonna have a child care tax paid by the company and the employee. That's coming up soon as well. And I point that out because I think there's going to be more stuff like that that's coming. I think there's going to be more complications to what we do with payroll. They're going to add. I mean, you see all these different, what do I list, like 8 laws here? Any of them could come to any state. So, and all of them could come to any state. So it just gets more complicated, and we want to help you guys stay aware of them, so you know what's going on. Okay, we're almost out of time, so I'm going to buzz through this. This is the meatiest part. How to handle certain problems at year end. So you mail out a W-2 and it comes back to you. What do? Well, what you got to do is you got to make a best effort to reach out to the employee who didn't get the form. That'd be what I would do. I'd write it right on the envelope when it was returned. I'd keep the envelope. This isn't right. I got envelopes here, but they don't matter. Like, I got an envelope, and I would just write on the back of it, returned 1/27/2024, no correct address, or unable to forward, or whatever, right? And then I would reach out, and then I write another note on it, emailed employee at last known email address, or called employee at last known phone number. After that, you're off the hook. You made a good faith effort, so you're good there. And it's going to happen, unfortunately. The other thing I would do is make their documents available online, which we do for our clients, so they can just go get it. What if an employee comes to you after submission that their social security number is incorrect? Because nobody sees them on their form anymore, nobody gets to get them. They're not knowing that it's wrong, and it's been wrong all year. So now what do? Well, we got to fix it. Like, that's the first thing. But what I'm saying in this is, like, after they don't tell you till March. So all the W-2s are submitted to the Social Security Administration. That's all done. Yeah, we got to fix it. It's going to involve amending W-2s and W-3s, or not W-3s, but amending W-2s. Get with your people that do your W-2s as quickly as possible and get it done. They might assess you a fee for that, because they have to pay a fee to get it e-filed if they're e-filing, and any payroll service is going to e-file W-2s. So you just want to make sure of that. You can do it yourself and just change the Social Security number. There is a way to do it. You probably don't want to mess with it because you got many other things to do, and I think that's fair. What I said, what is, I meant what if. What if an employee realizes they did not properly withhold taxes? We've had this happen a few times over the years.
Yep.
So an employee is all upset. And when we say not properly withhold, we mean did not withhold enough, and they owe a bunch of money, and they're mad at everybody. Why do I owe $2,000 to the IRS? Or why do I owe $2,000 to Iowa? Or whatever. We feel bad about that. We think it stinks. There's nothing we can do about it. They get pay stubs I'm dealing with how we handle it, but I'm sure that all of you do the same thing, whether you do your payroll in-house or use somebody else or use us or whatever. They get pay stubs every week. Every week it's on there. It said Iowa 0, or it didn't say Iowa at all. in that example, or the federal tax, they made $1,000 and paid 6 cents in tax. It was on there the whole time. They already got that money. The money that they owe to the feds or to the Iowa in the example I gave you, that's money they already got. So I feel bad for them and it stinks. But even if they had given you a new W-4 and you forgot to get it to your payroll service or forgot to put it in, or even if your payroll service made a mistake, they had these. Like they had them. So they should have seen it before. It's their responsibility to review their paycheck too. So it stinks. I'm really sorry, but I'm not paying for it. And I say I'm talking about you. That's what you would tell them. You don't pay for it either because they already got that money. If you choose to lend them money, that's up to you. But it's not. You're not. You make a good faith effort and you're there. It's up to them after that. One other thing, I've got a question. We're at question time. I've got a question. It's actually it came in before we even started the webinar. It's about 1099s, and it was about, I'm trying to remember it. It was a CPA over in the Detroit area, works with trucking companies, and he and I talk on occasion, and it was about 1099s, sending them to corporations. Don't ever do that. Bad, 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 bad. S corporations, it's why you get W-9s. S corporations and C corporations do not get 1099s. And so one of their clients had accidentally sent in 1099s for everybody that they had. They had a brokerage. So they sent it in for everybody. And they got fined $26,000 because they had, I think, 95 1099s that they sent in that they weren't supposed to. So I think they're going to get out of it. I think it's going to be fine. It's not it was them handling it with their client. And he was just talking to me about it. And I was like, I would have amended them right away. But it's just a cautionary tale for the rest of you. Do not send 1099s to corporations. And if I would even go further and say, if their name of their company has corporation or Inc. at the end, they're a corporation, even if they fill out the W-9 wrong. I would say don't send those either, because you can't just put Inc. on the end of a business name and not be a corporation. The states generally won't allow it. So at the very least, you got to call them and be like, are you incorporated? Because you don't want to get that fine. It can be costly. One or two, they're not going to worry about it. But when you're doing, I've had clients insist that I send them to corporations. Like, I wouldn't do it.
Yeah.
Fortunately, most of them get away with it. But again, this was a pretty egregious one because these guys, they just missed it. They weren't bad people. They're law-abiding people. They just made a mistake. So hopefully the taxpayer advocate, which was my advice to them, will get them out of it. But yeah, just be mindful of that stuff. And if you have questions about any of it, I know a lot of people are watching it now live. There's going to be people, we're going to put this on Facebook or on YouTube. We're going to put it on YouTube. We're going to put it on our website. People will watch it later. Here's our contact information. Call or email. Just, hey, I got a question about this thing. If you're not a client of ours, we still will answer your call. Our mission is to help trucking families. So that is not just trucking families that pay us every week or whatever. Like, it's cool. Just, we want to be helpful. So reach out to us. We've got some links here that we think are helpful. The YouTube link is on there. Our LinkedIn, our website's on there. We're redoing our website, so it'll look a lot better soon because I'm getting out of the way and letting other people do it. And we got the offer for Ascend down at the bottom. Try Ascend for 3 months for free if you're a client of ours, if you're looking at TMS people. By the way, if you need other resources for trucking, hit us up because we know people. Okay, I've got another question I'm trying to make so I can see it. Oh, here we go. All right, 40 hours. Oh, this is about the Illinois leave. All right, 40 hours paid leave in Illinois. Do we have to give that immediately or incrementally throughout the year? How does it work if someone's hired mid-year? I've seen the answer. I don't want to misspeak it because I don't want to get it wrong. My understanding of it's like Michigan, they don't get it for 90 days. So the first 90 days you don't give it to them, and then I think you can give it. And I think I don't think they get it in full for a year. I think they get it incrementally through the first year, but not into anything till after 90 days. What I would tell you too is vacation time. Just call it paid time off. Don't call it vacation or sick or whatever. Just call it paid time off and you're covered. The person who asked the question is a client of ours, and I'm pretty sure they have a fair vacation policy, so I don't think they're going to have an issue here. But just if you're given vacation time anyway, just call it paid time off. It's just now it's just terminology change, and you can just do it that way. I will get you the specifics on it. I've read them, but I read through a bunch of law changes and my head gets soft like a melon. So so it gets hard to keep track of who's got what, but it is, yeah, I think that because if you already have a vacation policy that's at least 40 hours a year, just change it to called paid time off. You're good to go. But I will get guidance on that, and I might make a post on our website about it too for anybody else watching. Go to our blog, truckingpayroll.com/blog, and we'll put a post up there about it. Just a short answer of that, because I think it's important to know, and I'm glad that you asked. And then he said, "Thanks. You're very welcome, man. Always appreciate you coming." So with that, it is 5 after 12, so I'm already 5 minutes over. I apologize that I blew through a lot of this stuff quickly. There's a ton to cover. That's why I tried to leave a lot of it in the slides. We will be sending the slides to everybody who registered for the webinar. This link will be on YouTube, where some of you may be watching it now from the future and wonder why I'm wearing a Santa hat, because we filmed it on December 20, right before Christmas, and I'm trying to be festive because payroll is not always that festive. So I'm trying to have some fun with that. But yeah, again, YouTube people too, reach out to us, comment on the YouTube, or just email the contact link. Just get us, man. We want to help you. I take joy in helping people avoid making mistakes on things that could cost them money. You know, there's something for that. So, and trucking's already hard. Don't spend money on things you don't need to spend money on. So with that, I'm going to end the webinar. Thank you all for coming. Have a Merry Christmas, Happy Holidays, Happy New Year. We will see you all in 2024. We are working on our next webinar now. We will announce it as soon as we can officially announce it, but we're working on someone to guest here. So we will see. We'll talk to you soon.